why thinking like an entrepreneur will make you a fortune. We're going to really unpack that. Little trip down the money lane here. Why thinking like an underwriter will make you a fortune. First off, let's look at the perspective of an entrepreneur, of a business owner. And one of the things that you need to do constantly, whether you're at the beginning of the journey or you're a year in or 2 years in, like so many, just looking at like our business finance journey. You know, when we started, we had to do business and personal credit card stacking to get the business off the ground. Once that was in place, then we were looking to grow those credit limits. And then we were looking at different other loan options. There were SBA loan options available. There's business line of credit options, all these different options to grow your business as a business owner. So what is it that a business owner should be thinking about in terms of thinking like an underwriter? How can that help them, you know, Bob the plumber, or, you know, Susan who started an e-commerce business with Amazon, or, you know, Robert who wants to be a real estate investor? Thinking as an underwriter, as a business owner, how does it help you if you're a business owner and you want to really grow your business and you know you need access to money to do it, but you don't even understand? What does it mean to think like an underwriter?
Yeah, I think thinking like an underwriter is understanding what they do and understanding that underwriters are very, very analytical individuals. They like everything to be black and white. There's quantitative reasoning behind everything that they do, and understanding that your complex file being sat on their desk is their worst nightmare. They hate that. They would love to just quickly decline that. And so sometimes what I found, Leo, is as a business owner, especially this most recent mortgage, everyone's always said, don't tell an underwriter anything they don't need to know. And I found that to be actually the complete opposite, and caused a lot of problems because I just submitted stuff and said, oh, the money's there, they'll figure it out. Whereas if I would have beat them to the punch and explained, this is why it's this way, this is why it's this way, this is why it's this way, here's my financials and my explanations on absolutely everything, I could have avoided having to get a short-term hard money loan, having to refi, having to do all this stuff. But I broke our own rule. I didn't think like an underwriter. I just trusted that they would figure it all out, and that's not how they work. They need to understand everything clear as day, especially right now.
And so did that include like a bunch of letters of explanation explaining this?
Absolutely. Absolutely. All the way down to a little $300 credit builder secured loan. Literally, that was holding up our file at the very end. It was like $10 a month, which baffles me. I can't understand how, if an underwriter is going to sit here and say, oh, this $10 is Ty, that's going to put you over the edge.
I'm a little concerned about this, Ty.
I probably shouldn't buy the house if that's the case. And it's not the case, but I could have beat it to the punch and explained this is what it is. It's a really small company. They're not reporting things to the bureau. Here's a screenshot that shows that I actually did pay it all off. I could have avoided a lot of these headaches just putting it all out there right off the bat.
The one thing about underwriters are very detailed thinking. They think about all the details, and their job is actually, you know, they're paid to worry. They're paid to worry about, well, you know, are you going to default, and what's going to change in your business, and what about your personal income and your debts, and how likely are you to pay this back? And anytime you throw a wrench in that process and make it more difficult for the underwriter, then obviously that increases the odds of them getting declined. And I think you're exactly right. And you know what this reminds me of? It reminds me of a client named Greg from Chicago. And this was one of our early clients that we were helping. I think it was clear back in 2019. And this guy had been trying to work with another group, and he was getting declined, and he was getting really, you know, frustrated with the process. And I dug into his file, and like you, he was a real estate investor, and he had a couple of different rental properties, and he was selling one of them. And what was happening was, on his tax return, all of that rental income from the properties didn't really show up as income. So it looked like he had way too many debts and not enough income. And so everybody kept on declining him. So what we did was we did exactly what you just did to get, you know, when you're a business owner, getting a mortgage is always a very complicated process. And so we put together a letter of explanation saying, hey, I own these two properties, and here's my lease agreement, and here's my bank statement showing the money coming in from these two properties. So yes, I've got these mortgage payments, but they're being covered buy the property. And outside of that, my personal expenses are low. I've got plenty of personal income to cover those. And oh, by the way, these properties are actually worth a lot of money, and I'm going to be selling one in the next couple of months. And once we put that together, not only did he get one loan offer, he got two. And then he was able to pay down his credit card balances. He boosted his credit score. He was able to get that house fixed up, sold it for, I think, $50,000, $60,000 in profit. And then he also got 0% interest card stacking. And so that's how important it is to be able to think like an underwriter if you're a business owner. And the way to do that is to get ahead of it and think, where in my file are they going to have issues with? So what are some of the common issues maybe that underwriters will find for you as a business owner, or even in getting a mortgage, that if you think about it ahead of time, you can get ahead of?
Yeah, I think as you're talking, this thought came to my head, Leo, is understanding that as an entrepreneur, as a business owner, naturally we tend to be a little bit more of a risk taker, right? We're willing to take educated guesses and take some risks, whereas an underwriter will never play the guessing game. Plain and simple. They just won't do it. So what I've found is a lot of the things that the underwriters won't like is when they look at these complicated files where, okay, you're listed as an owner on this business, but I don't see in your tax return where it shows you just submitted your personal taxes, and I don't know how much of this business you own. I don't know how much of it's passing through to you. I need to have your business tax returns done so I can actually see how much you wrote off. There's a lot of things that go into that, but ultimately getting with your tax accountant before you're going for some mortgage loan or something and saying, hey, I need everything buttoned up. I need this crystal clear. One mistake that I made is I sent the do not file copy of my tax returns instead of the official tax returns, and I thought everything was fine. And then 2 weeks later, don't ask me why it took 2 weeks, but 2 weeks later, it's like, oh, well, this is your draft. We need your official tax return. It's like, don't understand sometimes, but getting everything buttoned up. I've learned over the last few years is every tax season, I have one folder that says taxes. Within that folder, it says the year. Within the year folder, it says personal, BFF, whatever the business it is. And then within that folder, it's homes, W-2s, 1099s, everything really, really detailed out so that's not this wild goose hunt every time a mortgage lender needs a new document.
No question. And if you're a business owner and you're looking to think like an underwriter so that you can position your business to always, qualify for financing, well, it starts with the personal credit situation. And so you should know anytime you're about to go apply for funding for your business that your credit score is going to be looked at. One of the fallacies or misinformations out there is that, there's some lenders that only care about my business credit. They don't care about my personal credit as much. That's just not true. Maybe $1,000, very small business line at Staples or Office Depot for $500 or a gas card. Maybe that's true in that case, but it's not true if you're looking for cash financing, a line of credit, a loan, a business credit card that you can use any way you want to grow your business. And so you're going to have to understand, what do I need to do to my personal credit to make sure it's looking good? Well, a lot of people just think we'll just make the payments on time. That's not enough. The biggest factor that most people miss is they used some personal credit cards and maybe they even paid them down or they're planning on paying them down. But right now they're showing maxed out, they're over the limit, and that's killing your credit score and leading to declines when it comes to a business line of credit, a business credit card. And so first thing you want to do is get those card balances paid down to 45%. If you can get them down to 30% of the limit, if it's a $10,000 limit card, get that balance paid down to $4,500, $3,000. Your score is going to be much higher. Now you're going to have an easier time qualifying. So that's kind of the first thing. And when you start to think about the business, maybe the next thing you need to think about is, how are you taking care of your business bank statements? And I really like the way that Maria unpacked this in our training yesterday with the company, how important it is to, take care of your business bank statements. What were some of the things that she was sharing that you thought, that's important for a business owner to know?
Yeah, I mean, positive cash flow, that's probably the biggest thing that underwriters do want to see. Because like you said, yes, your personal credit is very important. If you want to get anything other than a very, very expensive merchant cash advance, you do need to take care of your personal credit. But even more than that, if you want to get anything other than a very, very expensive merchant cash advance, you need to show that you actually have a surplus month after month after month. If an underwriter looks at your bank statements and realizes, okay, you started at $100K, and you ended at 90K, then you started at 90K and you ended at 70K. If you're on this trend of your starting balance going down month after month, even though you're generating a lot of revenue, lenders are not going to lend you money because they look at that and say they can't afford any extra bills every single month. They're already losing money. So you're right. I mean, the average, making sure that you're depositing more than you're withdrawing month after month before you're going for financing is very, very important.
Absolutely, guys. So thinking about your business bank statements, they're going to look at the last 3 to 6 months. That's what's weird. Like you could have a really good business tax return from the year before, but if your last 6 months show, dang, the business is nosediving, and unless it's a very seasonal business where you make all your money, in summertime when times are warm, maybe you're in construction and you have your business in Minnesota. Well, obviously it's tough to do a lot of construction projects outdoor. During the cold winter months of Minnesota. And so maybe your business is seasonal and really picks up in the summer. So those are things you want to take into account. And that's why it's always important. Probably the biggest thing when you're thinking like an underwriter is understanding, well, when does my business look best each year and when does it not look the best? And so when it's looking really strong, that's a good time to go get the money before you actually need the money, especially if it's a business line of credit, business credit card. Now it's available when you need it. And you don't have to worry about trying to qualify when you're not going to qualify because you're not looking very strong. So that's kind of the perspective for a business owner. If you're a real estate investor, there's a lot of different challenges for underwriting. And so when you're a real estate investor, you're trying to get that next mortgage, that next property. One of the big things that they're going to look at is your down payment, and your down payment actually needs to be seasoned. And when they say seasoned, what that means is unless you want to do a bunch of detective investigative work where they're going to do a colonoscopy and figure out where did this money come from, if you have the money in your bank account for 2 consecutive bank statements and it doesn't show it being deposited in those bank statements for the last 2 months, then that's called seasoned money. It's been there for over 60 days for at least 2 consecutive bank statement periods. Now you're going to be good to go with your down payment, so that's a big part of it. What do you think are some of the other real estate investor guidelines that you should be aware of if you're an investor, and start to think more like an underwriter for your next investment property?
Yeah, that's
and you've gotten a lot of investment property mortgages, so you're a good person to ask.
Yeah, you're right. I mean, making sure that you've got all your ducks in a row before you go out and apply for that new loan, like you said, with the making sure the down payment is seasoned. The other aspect of that is like you said, making sure that your utilization on other accounts is brought down below that 30-35% range. And then if you have too many inquiries, right, if your credit file has a boatload of inquiries on it, sometimes you can write a letter of explanation for every single one of them, or it's pretty darn easy to get inquiries taken off your credit file at this point if they're not tied to an open account. So maybe going through and getting some inquiries cleaned up beforehand, and then like you said, getting ready with if there's a really, really large lump sum deposit here and that you already know for a fact the underwriter is going to see that, talk to your loan officer beforehand, explain what that is, get a letter of explanation ready, and send all that through. Like you were talking about, Leo, with the business bank statements, if you like to get that zeroed out every single month, like a lot of people do, a big mistake I'll see people make is they'll go apply for a loan and they'll only submit their main checking bank statements, and you just hope, right? You just hope that the underwriter is smart enough to realize that, there's $10,000 every month that goes into a savings account. But guess what? You should never, ever hope that an underwriter is going to be smart enough to see that. So beat them to the punch and say, yes, it looks like I zero out every single month, but that's because I'm moving money to this account, and beat them to the punch, come to the table with those statements showing where the money's going. If they only allow you to connect one bank account when you apply, submit your application and immediately call them, and do not get off the phone until you can explain that to someone, because they will decline you right away. So it's just beating them to the punch with these little confusing things that may not just be super obvious to the underwriter.
Yeah, no question. And anytime you're like a real estate investor or business owner, sometimes you have multiple business entities, and then that's going to lead to more questions. And so having those business tax returns handy, and then having an explanation, like you said, maybe a letter of explanation with each business. For example, one of our businesses, we had a boat rental business, and it was down in Lake Powell, and it was a pain in the butt. It was taking all of our time, and our business tax return didn't look so good. But we actually closed that business. So kind of having a letter of explanation saying, hey, this doesn't look great, but don't worry, we closed it. So now it's not going to hurt us moving forward. Now they don't have to necessarily take that bad business tax return into account because it's now a closed business. So it's just understanding where are the issues. And if you don't have those letters of explanation ready to go and think like the underwriter, then they may just decline you without having a conversation. And underwriters are very they're difficult to change their mind. Once they've made up their mind and they've decided to turn something down, I think it's very hard, if not impossible a lot of the times, to turn that back into an approval. And so getting ahead of it, again, that's probably the biggest thing here is think ahead, think where are the issues and what can you do to remedy those and explain those before you even get to that point. If you're a business funding professional, thinking like an underwriter is even more important. And understanding all these things we've talked about, credit utilization with the personal credit report for your client, how they take care of their business bank statements. If you're trying to help them get a commercial real estate mortgage, or maybe you're in the mortgage industry, understanding those letters of explanation that need to go with each one of those businesses and explaining things is going to be very important. Even, if you're trying to raise venture capital, you have to think like a venture capitalist underwriter, and they're going to underwrite. And well, how strong are you compared to the competition? Do you have any sales yet? Do you have proof of concept? If you think about the ERC, same thing. Was the business open in 2020 and 2021? Did you have W-2 employees? Is all of the payroll you paying to yourself as the business owner? You didn't actually have any employees that you pay. So all these things come into play as a business funding professional. And so the sooner you begin thinking like an underwriter, the sooner life is going to be better. And even in insurance, like there's so many businesses where underwriting is really key.
Yeah, absolutely. Absolutely. I mean, that when we look at the business funding space, a business funding professional, it comes down to gaining trust from your clients, right? If you can think like an underwriter and help a client understand that, hey, here's what it takes to get this, here's what it takes to get this, here's what it takes to get this, they're going to understand and trust that you are positioning with the very, very best form of funding. So being able to think like an underwriter on top of having some very basic sales skills, you can really, really do well in the business lending space.